2022 pricing was absolutely insane, and you may be waiting to get to that price point in order to make your upgrade move. But let me tell you something, which I've been telling a lot of people for a very long time, but I want to put some context behind it. Give me 1 second here. This is the midweek market update, and I'm going to get to that update in a minute, but I want to share this information with you guys. So as you guys know that I work a lot in Pickering and I'm very familiar with Duffin Heights. And I actually want to put it out there that probably nobody knows Duffin Heights better than I do. But let me show you something. So basically, if I look at 2022 pricing for a townhouse, okay, versus a single car detached, here are the numbers. So a townhouse was just over $1.2 million, okay? And a single car detached, the average was just over $1.4 million. Now, in 2025, townhouse in Duffin Heights is about 870. And if you look at detached, it's just under $1.1 million on average. Now, both of these are down. Townhouse is down 28% and the detached is down by 24%. But let me tell you this, if you look at the dollar value, it's down the exact same amount within $1,500. So basically, if I look at the average townhouse, it's down about $345,110. And if I look at the average single car detached, it's down $346,000. Guys, these numbers are exactly the same. Right now, I'm working with a bunch of clients that are extremely smart people. I feel like we really get the smart people working with us because they understand this and they have very secure jobs and they're comfortable with what's going on in the economy and they want to make that upgrade move. And I think it's a very smart move. As long as you feel comfortable with everything else around you in terms of job, family, everything is going good, I think this is a great time for you to kind of upgrade because when you look at the dollars are exactly the same. So it doesn't mean anything, guys. Like, so if you were looking to sell your townhouse for like $1.2 million before you buy that single car detached, when you break it down, the net dollars is going to be exactly the same. So this is a good opportunity right now. There's a lot of inventory, which I'm going to get to, on the market right now, and you have a lot of options. And not only do you have these options, but you can put in all the conditions you want. And, this is something that may or may not last a long time, but I'm not really concerned about that. What I'm concerned about is that if you actually want to make an upgrade move, this is probably a really good opportunity for you. But this is a midweek market update, so let me shoot you those numbers quickly right now. So as of today, our inventory is 24,293 units, okay? And I just want to put this out there. So on average, and we'll get to the sales, it's about 1,000 units, maybe a little bit less right now. Week over week sales is about 1,000. So this means that we have 6 months of inventory. If we did not list even one unit today, we would not run out of inventory for 6 months. Is a good situation? Probably not. If we want the market to move, what would be a good situation? I don't know, 2.5, 3 months worth of inventory. I think that would be a good situation. So we need about half the inventory on the market based on what the sales are at right now. But, let's see how that ends up going. But I do think that the number of listings will come down when I report this next week because we're coming to the end of the month. And usually at the end of the month and end of quarters, we actually see a big number of terminated listings coming off the market. So let's see how that looks. In terms of week over week inventory gain, last week was 6%, this week was 6%. Prior to that, we were averaging about 4%. Last week, our unit count was increased by over 1,200. This is over 1,400. So still that same 6%, but we got an additional 200 units more this week than we did the previous week. And just to break that down for you right now, so we basically have 8% more in freehold, which is 928 units, and 5% more in condos. So that's kind of the split, and that was 491 units in condos. As of today's date, compared to last year's date, we actually have 62% more inventory compared to last year, and the breakdown on that is 72% more freehold and 53% more in condos. Another note I want to put out over here is Toronto and York region. They both actually have an 81.5% inventory increase in their freehold. That's right. Between last year, this date, and today, we have 81.5% more inventory in Toronto and York region. It's quite a lot. In terms of sales, so last week when I reported this, we were down about 5% in terms of sales. Said, was that because of March break? I don't know. But this week we have about 9.6% more sales compared to last week. And year to date, we're still down 27%. Halton is actually down by about 40%. And when we look at price, so price is a little bit finicky to get into the system on a week-to-week basis, but we do our best. So the 1 week versus the 52-week average, we're down about 1.4% in the GTA. But the week over week was very strong. Again, was that because we got more sales? Was that because March breakup of last week when we ran the numbers? Not sure. But I have to exclude Toronto because Toronto week over week was showing me almost like a 50% increase, which leads me to believe that was some really high price point sales in there. So I just want to kind of exclude it for this week just so I can get a little bit of a better gauge on what I saw week over week. And when I exclude Toronto, we had about 17% increase week over week in price. When I reported last week over week, we were down about 8% for week over week and average week. So we have a little bit more sales this week versus last week. We're seeing, prices a little bit higher than they were last week. And we're still seeing an increase in inventory. There's a lot of stuff kind of coming down the pipeline over here right now, and it's going to be interesting to see how the market actually moves. The tariffs, Trump is going to be saying something about that April 2nd. We'll see what happens further with the interest rates. We have our own federal election going on right now. On the bright side, fingers crossed, the weather is actually getting better too. So is that going to inspire more people to get out there and start doing some shopping? Again, I think that's still the play over here for the people that are looking to make a move in this market. And if you're doing it on all good circumstances, sometimes we get calls for people that are maybe not in the most pleasant circumstances, which is, maybe they accumulated too much debt. So they're pretty leveraged. Maybe there's a breakdown in a family relationship, or there has been a death. You just got to make that move if you got to make that move. But if you're looking for the right opportunity and you're doing this because you want to kind of do it and capitalize on it, again, I don't think that, anyone else is better right now than maybe first-time home buyers. If you believe in where the market is still going to go over the next 10 years, I do believe in buying real estate for a long period of time. And also for that move-up buyer, I'm telling you right now, we've got a bunch of these move-up buyers, and I really think these are smart people making a really good decision, as long as the caveat is, if you know that you have your income and that's not going to get affected by what's going on, you feel strongly about that, and it's something that you want to make a move, and you're going to move into a neighborhood that you really, really like, and you're going to be there for a long period of time. Hope you guys like this market update. There is a lot of information I can't get into here. I'm already looking at the time. I'm on 8 minutes into this, and I'm sure this is way too long. But if you want anything specific, feel free to send me a DM, give me a call, shoot me an email. I'm happy to get you the specific information you're looking for. Hope you guys have an awesome rest of the week. Cheers.